Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing financial documents into your next big insight. This week, we're diving into a special report from Prudential Financial Incorporated. And if you think the 15th of January is just the start of the year, think again. Because it looks like they're giving us a sneak peek of their year-end performance early. Before we jump in, if you love getting these kinds of breakdowns, make sure you are subscribed and hit that notification bell. Also, we've got a fantastic community over on Discord, all about digging into these corporate secrets. You'll find the link in the description below. Prudential Financial Incorporated is filing a current report, like a special update to let everyone know what is going on. They're giving us a heads up about their financial situation as of the 15th of January 2026. Let's get straight to the financial tidbits. Prudential Financial has a few things registered on the New York Stock Exchange. Their common stock, which is like the regular shares of the company, is trading under the ticker symbol PRU. Then they have some specialty debt, like the 5.950% junior subordinated notes with the ticker PRH, the 5.625% junior subordinated notes, ticker PRS, and the 4.125% junior subordinated notes. Ticker PFH, these are essentially loans they've taken out and they're paying interest on them. This section is all about how the company is doing financially. What is interesting here is that they're pointing us to another part of the report for the main financial news. This is where Prudential Financial, or the company as they call themselves, is sharing some preliminary financial information for the quarter that ended on the 31st of December, 2025. They're getting this out before their official earnings release, which is scheduled for the 3rd of February, 2026. Think of it as a sneak peek. And it is important because it is covered by what is called Regulation FD or Fair Disclosure, meaning they have to tell everyone at the same time. One of the key things they're revealing is about their PGIM segment, which is their investment management business. As of the end of last year, the 31st of December 2025, they were managing a massive amount of money, $1.47 trillion. That is quite a sum, showing the scale of their investment operations. Looking at the last 3 months of 2025, PGIM brought in about $55 million from what they call other related revenues. This includes things like fees for hitting certain investment targets, fees from deals, and income from their own investments and from originating mortgages. It is like the cherry on top of their main investment management fees. Now here is where things get a little more specific and perhaps a touch concerning. The income from their alternative investments, which are things like private equity, hedge funds, and real estate, is expected to be a bit lower than they initially thought. We're talking about being $5 to $25 million short of their expectations for their general account portfolio, which excludes some specific parts of their business. This means some of their more complex or less liquid investments didn't perform as well as hoped in the last quarter. It is super important to remember that all of this is preliminary. It is like a rough draft of their financial report. They haven't finished all the accounting checks and balances. So while this is what management believes to be true right now, the final numbers could be different. That is why they call it estimated and unaudited. They've done their best with the information they have before finalizing everything. You'll also see a lot of talk about forward-looking statements. This is standard legal language. It basically means that when they talk about future expectations, like those estimated results, they're not making a guarantee. Things can change, and the actual results might be quite different. They're warning investors not to take these predictions as absolute facts, and they advise looking at their risk factors for more details on what could go wrong. Now, let's dig into that footnote. They use something called adjusted operating income to measure how their different business parts are doing. This is different from the usual net income or profit you see on a standard income statement. Adjusted operating income is their way of looking at performance after removing certain kinds of gains or losses, like those from selling investments, changes in the value of some financial products, and other specific items. It is a measure their top managers use to decide how to run the company and where to put their money. And finally, wrapping things up, the report is signed off by Robert E. Boyle, who is a Senior Vice President and Principal Accounting Officer. This confirms the company is officially submitting this information. So, what is the story here? Prudential Financial is giving us an early look at their year-end results. And the headline is that their investment management arm, PGIM, is handling a colossal amount of money, $1.47 trillion. That is a huge number, showing their massive reach. PGIM also had a pretty good quarter for extra revenue. However, the company itself seems to be facing a bit of a shortfall in its alternative investment income. This means some of their more complex bets like private equity and real estate funds didn't quite hit the mark they were aiming for in the last 3 months of 2025. It is not a disaster, but it is a noticeable dip below their expectations. The key takeaway is that while the core of their business is massive, the more speculative parts of their portfolio are facing some headwinds. We need to watch these alternative investments closely because they can be volatile, and a sustained underperformance could impact overall profitability. For now, the preliminary numbers suggest a solid, but not spectacular end to the year with a slight wobble in some of their more adventurous investments. Alright, that is our breakdown of Prudential Financial's early report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.